Elf Beauty, what's going on here? Well, something very interesting going on with Elf's business model right now, okay? Listen, the revenue of the company continues to uptrend very nicely. Net sales was up to $301 million from $215. Cost of sales didn't go up that much. It went from $63 million to $87 million, right? That's only up $24 million on a year-over-year basis when it comes to cost of sales versus net sales up $86 million. So gross profit boomed $62 million, right? So everything looks great for Elf if we were just to shut down the income statement right there and we just shut it down. Like gross profit boom, company's booming, like let's get back to $200. But we've got an issue. Look at SG&A, selling general administrative expenses. $186 million versus $112 million in the same quarter last year. So operating income actually fell for the company year over year from $40 million to about $28 million. Now, the company said they're going to spend aggressively, so we already knew this, but to see it in the numbers is painful, man. Because at the end of the day, if your revenue's exploding like that, what is that, about 40%-ish? Revenue up year over year, to then see your operating income go down, it hurts. It hurts, absolutely, right? Other income was up very nicely for the company year over year. However, interest expense was also up. Net income fell to $19 million from $33 million, diluted EPS of 33 cents versus 58 cents. So that's why they got a grade C on this income statement. This, if everything just continued like this would have been a grade A income statement. But the spending's out of control for Elf right now. Now, why are they spending so much money? And the reason they're spending so much money is because they're expanding aggressively international right now, right? And also they're trying to really focus on market share right now and not really focus on necessarily net margins right now, right? There's going to be a day for Elf when they can really focus on net margins, and that's going to be like a 10-year run in regards to net margin expansion. But for right now, they're just worried about market share, and guess what? Market share. So I can deal with that. As a long-term investor who's done very well in this stock, I trust the CEO of this company, Terang. He's done a hell of a job running this company. I got a 1,500% gain in it. That's like, I'll take that. Like he's done a hell of a job running this company. So I trust his judgment. If that man says we're going to spend very aggressively right now and we're going to capture as much market share as possible, he has earned the right to make that decision. So, although I don't love it, I would love to see the net income going up. But here's the other thing you got to understand about this, right? If now in 2025, let's say in 2025, spending chills out, which I think they could have it chill out. When I say chill out, it means keep it flattish, or maybe it goes up a little bit, but fractionally up, right? The revenue is going to likely continue to expand for the company. So then we're going to start to see in calendar year 2025, you could actually start to see major net margin expansion next year, right? And then if they just have, expense profile go up a little bit in 2026, we'll see a much bigger move to the upside in regards to that. I don't think they have to add to SG&A in much at all in 2025, if at all in 2025, and same thing with 2026. So we could the next 2 years might be much more about net margin expansion, profitability expansion than revenue expansion. Whereas if you look at really the past 2 years, right, the past 2 years have been all about market share expansion and revenue expansion. If we talk about 2023 and 2024, and if I really think about 2025 and 2026, I think it's going to be less about revenue expansion and market share expansion, although that's going to be happening. I think it's going to be much more about the bottom line, the profitability, net margin expansion, starting to build a big cash balance again, and those sorts of things, right? So that's my belief on what's going on here. But yeah, let me be very crystal clear. If we had a net income that was also going up and they weren't spending this aggressively, right, while still bringing in this sort of revenue, this stock would be 200 plus, right? And so can I see the stock getting back to 200 plus anytime soon? The answer to that is yes. I could see the stock getting back to 200 plus. I could see it getting back to 200 plus in the second half of 2025 or maybe in 2026. As long as the expense profile chills out in calendar 2025. If we can do that, I think you're going to see the bottom line boom, and I think that's going to get a lot of people very excited about this one. And they don't have to keep posting this, ridiculous revenue growth of like 40%, 80%, 70%, all these crazy numbers. Like if Elf can just become a company that you can be confident in is going to grow revenues 20% a year and can grow their bottom line at a 30 or 40% clip a year, Elf will have one of the biggest valuations on it in the stock market in terms of what it will command for a PE ratio. Because it's beauty, so it's almost like a SaaS business model. It's beautiful. Like people just buy the product again and again and again. But if you can be growing that top line consistently 20% plus a year and growing your bottom line 30 or 40% plus consistently a year, Elf's going to become the biggest cosmetics company in the world in that situation, right? So that's going to be unbelievable. But they've got to execute this next part of the plan, right? Now, I took these pictures actually from Target. I went this morning to get something, right? And I went by the makeup area, and I was like, oh, let me grab some pictures here for you guys. So this is the Target that's closest to me. And look at the shelf space. This is all Elf. This is all Elf. All Elf, right? I mean, their presence now in Target stores, which Target's a huge player in cosmetics, is unbelievable. It is unbelievable, their presence in these stores. Not only that, check this out. Right at the beginning of the beauty area, look at that. Elf, Elf, Elf. Listen, Target's not going to put Elf in these sorts of big sets like this unless Elf is moving crazy volume. Like, I still remember when Elf's entire section was about this size. I remember when Elf's entire section in a Walmart store was this size. And that's what it was when I first started investing in the stock. And now we have several of those areas, right? Additionally, we'll have these like random pop-up areas with a bunch of Elf products. And additionally, we'll have another Elf section as well. I think this is like the primers and stuff like that. So, I mean, Elf's presence now in these stores, in what you're seeing here, you're going to see in Walmart stores as well. Walmart's still lagging shelf space size from everything I've seen. They're still lagging significantly Target. That's going to be a game of catch up. And at the end of the day, like Elf's products are so affordable, it's a perfect fit to build out substantially in these Walmart stores as well. Now, to give you just some kind of reference to like what a smaller company's makeup section looks like, this is Honest. Honest is a stock I own as well, right? Honest is a huge player in obviously diapers and wipes and like lotions and soaps and things like that, a lot of like baby care products. But additionally, they also have their makeup side of the business and beauty side of the business, right? And their section is that big in a Target store, right? So just to give you some reference of like how Goliath Elf is becoming, right? And as I tell you guys with these products, like Elf's going to be able to go up 50 cents on these products, 25 cents here and there, right? And that seems like nothing. Like the consumer won't even notice if Elf goes up 25 cents or 50 cents on a product, right? And Target raises the price $1 on a product. But what will happen is Elf's margins will explode to the upside. And so Elf can play that game of just charging a little bit more and a little bit more for these products for many, many years before they ever get to a place where people are like, oh, wow, these prices are really expensive now. Because you're looking at the price points of a lot of their products. I mean, basically everything Elf sells is like under $20. Like it's hard to find anything that Elf sells that's over $20. And many of their products are kind of in that $5, $8, $12 range. Like you could just go through it and you're like, dang, so that's a beautiful thing in regards to Elf. Now, they also put together this beautiful presentation to show some of the numbers. Net sales up 40%, adjusted EBITDA $69 million, market share, remember what I told you, they're going after market share. They increased market share 195 basis points on a year-over-year basis. 23 consecutive quarters of net sales or market share and market share growth. That's unbelievable, right? Unbelievable. I mean, it's just insane, man. Just insane. So one of 6 consumer companies out of 546 to grow 23 consecutive quarters, averaging 20% growth. That's insane, right? This is a one-of-one company. One of one, literally, cosmetics brand out of 988 to grow market share for 23 consecutive quarters. 23 consecutive quarters? That's insane, man. That's insane. They're one-of-one, literally a one-of-one, right? I mean, just ridiculous. 91% international sales growth. Now, as I told you guys, this is, whenever you're expanding to new markets, it's usually expensive to do it properly, right? And that has raised Elf's cost of doing business in the short term. But as those sales boom, next thing you know, those markets start to turn into straight profit engines. 91% international sales growth is insane. International penetration, they're now up to 21% from 16% at the same point last year. Outpacing international category, 20x the category in Canada. Oh my gosh, in the UK, 7x the category. Jeez. And the unbelievable thing with Elf is they're so phenomenal on social media, it's insane. So phenomenal. So as they expand to these other markets, like a lot of people already know the brand because they've seen it on Instagram, TikTok, other social medias in general. Digital consumption growth, 40% in this quarter, 75%. Oh my gosh, that's insane. Q2 fiscal year 2024. So they were at 74. So they came off of a 75% comp, and they still comped 40%. That's nuts, man. Because these numbers get hard. Like when you're coming off a 75% comp, and you have to come back with a 40% comp on that. That's difficult. Beauty Squad, 5.3 million members, 30% growth. Higher average order volumes, stronger retention rates in regards to that. So that's good. Nielsen tracked channel data. Nielsen, they measure a bunch of this stuff. If you ever owned energy drink companies like Celsius or Monster, those you'll know of Nielsen very well as well. They're talking about 16% actual growth, 20% expected. If we look at Q1 fiscal year 2025, 26% growth in ELF versus -1% for the category. If we look at Q2, 13% growth for ELF versus -5% in the category. So this really shows you that the beauty category is very weak right now, extremely weak to be down 5% there. But that's the thing with ELF that's beautiful, no pun intended, is even in a bad environment, a tougher environment, they're still taking market share. So if it's an okay environment, they're taking market share. If it's a bad environment, they're taking market share. And guess what happens when they're in a good environment? They're also taking market share, right? Number 1 in unit sales, number 2 in dollar share, fastest growing of top 20 brands. Whew. I mean, this beautiful presentation they put together. Is this not? I mean, how many companies are really putting together this high level of a presentation? That's what I say with ELF. Like, they just really do a phenomenal job, man. They do such a phenomenal job on every way. So here, now this Naturium brand is another brand that's expanding pretty rapidly for them. They actually bought this brand about, probably a year ago now. And that's a brand that has phenomenal upside. And they're getting it into a lot of retailers that have ELF as well. So, yeah, I mean, I think that pretty much wraps up about what we're looking at here. But everything looks really, really good in regards to that. I'm a very, very happy camper with all of this. So, yeah, hold on just a second. Oh, this is one last thing I want to show you guys in regards to ELF in this presentation here, right? Is remember I talked about price points for ELF so affordable compared to these other companies, right? I mean, ELF, the price points, $14 versus $49 for Prestige, $10 versus $38. And some people, they don't mind paying those Prestige prices, right? And that's where a stock like Estee Lauder comes in, EL. But for people that are really tight on a budget, which is a lot of people, and especially with the inflation we had over a few years there, they definitely gravitate toward a brand like ELF because they can afford it, right? So, yeah, ELF's unbelievable here. Okay, let's go ahead and react to this.
Beauty are higher this morning. Earnings of 77 cents a share beat the estimates of just 43 cents. Revenue was up by 40%, and it also beat expectations. The company ELF Beauty raising its expectations for full-year guidance. The cosmetics company has been under pressure this year. Year-to-date, stock's down about 20%, but this morning that stock is up by better than 10%.
And you know why that is? It's the same thing every year in regards to ELF. This is what happens. Everybody gets freaked out. Everybody gets scared about, ELF's growth is going to go bye-bye. This is going to happen. That's going to happen. They get all concerned. They get all paranoid. Oh, my gosh. And then you know what happens? ELF reports great numbers. And they beat analyst estimates almost quarter in, quarter out. They come in and beat. Like, look at ELF's history the past 12 quarters, the last 20 quarters. And you're going to find basically every single quarter they come in and they beat earnings per share and they beat revenue. It's unbelievable. It's one of the best companies I've ever seen in my life in regards to just coming in and beating those numbers again and again and again. People are like, how the heck do they do it? But they do it.
Of course, if you're looking since the pre-pandemic, it's been up sharply over that period of time. Over the last 5 years, a gain of 566 percent. That's thanks in part to viral marketing and its prowess in winning over young shoppers with value versions of what are prestige favorites. Shares of Take-Two Interactive have been volatile in extended hours tradings. They've initially fell by about 3% after the company's forecast for game sales in the current quarter came in below expectations. That indicates weak spending by gamers as inflation takes a toll on consumers. But
yeah, video game sales have been very weak for the past year. And you know what else has been very weak? Like any sort of gaming equipment, computer equipment, those sorts of things. I do believe in 2025 you'll see a comeback in some of those categories, but yeah, it's no doubt it's been rough. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. Now let's go ahead and speak about Elf Beauty. So in regards to Elf, it's a stock that's treated me tremendous. I used to own, if you added up all the shares in all my different accounts, I used to own around 10,000 shares of ELF roughly, right? Versus, not nearly as many nowadays. So one thing I'll tell you about ELF before we even get into the numbers is I regret every share I've ever sold of this stock. I regret every share I've ever sold of this stock. There's just no debating that, right? I remember when the stock made its first big run to like 20 something and I sold shares. And then it went to 30 something and I sold shares. Ultimately, every share I sold, I should have just held. So I think that's important to understand about this company. It is a very special company with a very special CEO and a very special social media presence that gives them reach that you've never been able to really see on this scale before for such efficient marketing. Such efficient marketing and such cheap marketing they're able to do with this brand. It's unbelievable. You never really been able to see something like this, right? Because back in the old days, if you wanted to have a cosmetics company, okay, you better be ready to spend crazy marketing dollars on soap operas, right? And commercials and things like that. Elf just doesn't have to deal with that because of the social media age we're in with Instagram and TikTok and YouTube and things like that, right? So in regards to Elf, their latest quarter they reported $1.10 EPS. They reported $324 million of revenue, and that was about 50% growth year over year. Now, here's where analysts are at. They're at 42 cents. And remember, they did $1.10 in the previous quarter, right? And analysts are only expecting 42 cents. Whew. And then they're expecting 89 cents for the quarter after that. Now, in terms of revenue, they're expecting revenue to be up 34% to $289 million on a year-over-year basis, which is down sequentially, so do keep that in mind. And then they're expected to do 324, basically the same number they did previously, which was around 20% revenue growth there. But then EPS at 89 cents, even though 324, and they just did a 324 number with $1.10 EPS, right? You say, well, they add some cost of business. Sure, but they really added that much cost to the business that on the same revenue, on just a couple quarters later, you go from $1.10 down to 89 cents? I don't think so. So my opinion is here, I think this earnings per share number is beatable for not only this quarter, but next quarter as well. Additionally, the revenues are beatable as well, right? There always is potential, maybe they miss or something like that, but that's always like the worry about ELF, maybe they miss. But look at the company. They beat like every freaking quarter. Every time you try to doubt ELF, they come through and just smash it. Every time. So maybe this is finally the time where the naysayers are finally going to be right on this stock, right? But it's every time you try to say, there's no way ELF can do it. There's no way ELF can do it. They get it done, right? This quarter, they beat 3 million, 14 million, 13 million, 17 million, 24 million, 31 million, 31 million, 18 million, 32 million, 28 million, and a $20 million beat, right? And look at the earnings per share beats. It's ridiculous. So once again, you can try to doubt this company. You can try to think it's finally the quarter that they're not going to make it, right? But somehow they always get the job done. And so even I look at the growth rates all the time, and I'm like, dang, can they really hit this number? Like I'm always like questioning, like, can they do it? They always do it. Like they always freaking do it. It's unbelievable. And so just be careful of assuming ELF can't do it, right? Now, if this stock goes under $100 on these earnings for whatever reason, be thankful and buy every share in sight. That's what I'll say about that. But a lot of times ELF pops huge and it goes from, let's say it's $100 before these earnings, and next thing you know, it's 120, 130, something like that. But if for any reason it goes under 100, say thank you and grab every share in sight. That's all I'll say about that. If it goes under 100, you grab every share in sight of this one. They are the now and the future when it comes to cosmetics and beauty for the affordable masses, right? Which was really when we're talking about under $20 price points, which is basically almost every single ELF product they have is under $20, right? Which many of their most popular products are kind of in the $5 to $10 range. And then, if you watch my video today, I spoke about Estee Lauder's a table pounder right now. And some people are like, well, why would you hold both stocks? They serve very different purposes. Estee Lauder's more high end, ELF's masses. ELF's, going to sell to the 19-year-old girl, right? Who goes to college and has a tight budget. And they're also going to sell to, the 40-year-old soccer mom who is on a budget as well, and she wants the best cosmetics products you can possibly get for what she has in her budget, and that's ELF. Estee Lauder, higher end. They're dealing with higher income brackets and those sorts of things, and so there's different needs for an Estee Lauder versus an ELF, and so I can own both those stocks, and I could be a buyer of both those stocks. Estee is a huge buy right now, and in the 60s. ELF, especially if that goes under 100, then that's a screaming buy as well. And I could easily pick up both stocks. And that's just a tremendous opportunity in regards to two companies, right? And keep in mind, those are almost like recession type proof businesses. I mean, you just look at them, and at the end of the day, if somebody's wearing makeup, they don't stop wearing makeup. Like that just is what it is. Like it's just a part of life. And so I actually love an Estee Lauder play along with a ELF beauty play, because you're getting low end and high end all in one, right? Which is a thing of beauty, in my opinion. No pun intended. Now, the last thing I want to leave you guys with here is focus on the long term. They got all these earnings coming out, and they're very important to look at. Pay attention to the numbers. If you have to change up some of your projections on 1000xstocks.com, change up your projections and things like that, right? But at the end of the day, focus on the long term. Don't get too tied up into one quarter versus another quarter, and lose sight of everything that's out there. Like, don't get too tied up in the short term. Listen to conference calls. Conference calls are very vital to understand what's going on with that business model and why it's doing well or not well, and opportunities there, things that are coming down the road. But don't get too don't feel like just because a quarter is really good, you got to go all in, and just because one quarter is bad, don't feel like, I got to sell out of the stock. Focus on the long term in regards to this, guys. It's always going to be very important, okay?